Hey guys, it is April 2nd, 2019, Tuesday. Today, we're going to do something special for you guys. If you're watching this on YouTube or anywhere online, chances are you may not be yet subscribed to our Market Moves daily subscription that is based on proprietary material from our 13 Market Moves formula. So if you've taken the 13 Markets Move course, but you'd like to advance your application skills of the formula, this is definitely a desirable subscription for you so you can sharpen your skills. If you've never heard of Market Moves formula or 13 Market Moves daily, this is something that is specifically designed for day traders and swing traders. Typically, as a part of the Market Moves daily subscription, we give you the top 3 observations on the market, and then we go into multiple market move sequences and so on that are highly predictable or what will actually take in place in the market next. So if you're reviewing this, wherever you're seeing this online, chances are that you may not be familiar with the 13 Markets Move formula. If it is the case, then click the link below, take advantage, and learn it because it'll definitely make your life a lot easier as a day trader or a swing trader. So with that, for those of you that are not as subscribers to the 13 Market Moves daily sequences, here's your chance to just kind of get a quick preview of what we talk about in our daily videos. So typically we start with the top 3 things. And the top 3 things for today, April the 2nd, 2019, is the volume, the bullish crossover, and the copper. And you may be thinking, what on earth does the copper has to do with anything? We're going to get into detail on that in just a moment. So here's the thing. The volume today, guys, has been extremely light. As a general rule of thumb, you can use this. Markets don't crash on very low volume. Just if you use that generally, you're going to be able to avoid a lot of situations where you're tempted to buy puts, and in some instances, buying puts on individual stocks is highly justified if the chart's divergences are pointed out to that. But we're just talking about the market direction overall here in general right now. So generally, markets do not make huge pullbacks or huge crashes on light volume. Now, today the volume has been extremely light across the board. We'll make observations about FANG stocks, different sectorial stocks, financial and so on. They traded on very light volume. So when things look like they're barely moving at all, it is generally a bullish characteristic in the market. It tells you people are not panicking. People are not selling positions on higher volume because that's what propels the market to go lower. So if things are just look like the calm water of the ocean, if the sea is calm, that's overall more bullish. Now, typically, that is a very precise characteristic of a move 5 where you don't want to be doing a ton of trading. Now, keeping this in mind, this very calm characteristic of the market coincides with the number 2 observation, which is the bullish crossover in the S&P 500. So, a few months ago, if you've been following our channel, if you've been a subscriber to our alerts, you know how much we've talked about this bearish crossover. And recently I discovered, talking to a few traders in the last few days, is look, people are getting confused with these crossovers. So let me just be 100% clear. When the blue line crosses the orange line on the way lower, that is known as a def cross. Now, what we're experiencing right now in the market is exactly the opposite of that. Now, the blue line is crossing the orange line on the way higher. So this is actually known as a bullish crossover. So again, take a look right here. This crossover is bearish crossover. This crossover here is bullish crossover. Now, if you look at other indexes as well in multiple different charts in different sectors, a lot of stocks are actually developing the same thing. I don't have a ton of charts plugged in here for the purpose of making this videos brief, but if you look, for example, in Bank of America, already made the crossover, already made the bullish crossover some time ago. A lot of stocks are getting close to a point where they are about to make a bullish crossover. So in other words, we're not just noticing in this bullish crossover just a handful of stocks, but we're noticing in more than half of the stocks. And therefore, this action is represented right here in the overall moving average of S&P 500. So this bullish crossover typically precedes a significant move higher. Now, you may be thinking, you've got to be kidding me, man. We've been moving higher from December 24th till now. I know, guys. As a matter of fact, we've posted a video on this channel right here talking about how the market could be going all the way higher, with the exceptions of a few pullbacks on the way, all the way through June, July, possibly even August 2019. We're actually taking a look at the charts in 1970s, 1980s. We made a very, very bullish case. So there should be a link at the end of this video if you want to review all the details. It's about a 40-50 minute video, guys, with all the details. So check it out if you haven't already. What else is making us so bullish on the market right now? Or technically, we're not all the way bullish yet, because there's still some things we're going to discuss in just a second that is not making us bullish 100%. But this thing right here resembles a bullish cup with a handle, which means, for those of you that may not be familiar with a lot of chart patterns, cup with a handle, just use your imagination a little bit. Try to draw a cup or portray a cup. So this would be one side of the cup, this would be the bottom of the cup, and this would be a handle. Now, this is not a perfect cup with a handle, because ideally, in a cup with a handle formation, you want the handle to go lower, and we just barely dipped here just a little bit. Now, when we're talking about cup with the handles, a lot of them are highly indicative of a significant move higher, literally like 5, 10, in instances, 15, 20% move higher from here, from this point. You see the point where we're just exceeding these level, this stop right here, this stop, this stop, this stop right here. Now, you got to be extra careful, guys, with these cup with a handle. Yes, they're extremely bullish and they're highly predictive. However, okay, keep in mind that some cups with a handle formations, they fail at breakout, and that's exactly what we're watching for right now. Even though everything like the lower volume and the market moves that we're observing, they tell us that the market is about to go even higher, despite of the fact that it's been going higher for like 3 or 4 months in a row now, right? But you got to be careful, because some of these cup with a handle formations, they do fail to break out, which actually could represent some really awesome opportunities on the short side. Now let's take a look at the third main observation that we've been actually taking a closer look over the last few days, and looks very, very interesting, guys, and it really tells us a larger picture of what could be coming in the next few months or in the next year. So copper typically is used as an economic indicator, and generally speaking, you know, the biggest consumer of copper would be China. And so as the Chinese economy improves, we would see the prices for copper spike. However, yesterday, on April 1st, we had some really good manufacturing data from China for the first time in a very long time. And so the market went higher, all the Chinese stocks went higher and so on. They had a nice pop at the open, and, you know, things were looking really, really bullish. However, the chart of copper does not look so bullish no more. And I'll show you, now we're taking a look at the daily chart really quick. For those of you that have taken our charts and divergences course, what do you guys see right here? Just answer this question before I'm going to give you the answer. The answer is actually quite simple, right? This is a multi-top formation. Look at this bearish reversal candles, these failed rocket launches. Every time the price of copper spikes, it just can barely touch this $3 level, right? I mean, every time we get to 2.97, 2.98, we're getting a sell-off. And that's exactly what we noticed yesterday, right? The price of copper spiked on good Chinese manufacturing data, and it sold off promptly. So, in other words, what investors are saying, they do not buy into these improving economy in China type situation, and they're using this level to sell copper. Now, let me show you, despite of these, clearly, we just discussed the bullish reversal, right? And this looks good, but we're getting some mixed signals as far as the accumulation distribution. In other words, at this level, we're seeing institutions that are coming in and they're selling copper at these prices. So what does this really tell us? Well, if this is the top and the price of copper is about to fall off, okay, this is an indication that we should pay very close attention, because it will have an impact on the market over the course of the next few months. Again, our projection of the market could be climbing all the way through June, July, August, and we could see a substantial drop-off right there. Let me show you how copper impacted the market, and you could see it it was highly predictive what the market was going to do. So this is the weekly chart of copper, okay? This huge drop right here, if you can see, this is very similar formation as the one I have just shown you guys on the daily chart. So check this out. So top 1, top 2, top 3, top 4, top 5. Boom. Guess when was this happening? Okay, when was copper collapsing, right? Well, that's when the market started dropping off, 2018. Now, look right here. Same formation. 1, 2, 3. Multi-top formation right here. What happens? Boom. Sharp sell-off. Copper sells from 280 all the way to 255. What is this? Guys, this is November, December 2018 when the markets were collapsing yet again. Now, what we're observing right here, what I just showed you on the previous chart, this is how it looks right now on the weekly chart. Top 1, top 2, top 3, bearish reversal candles back to back. Guys, what we are observing on the weekly chart, even though the daily chart looks like it's got the bullish crossover going for it and so on, the distance between the blue line and the orange line seems to be decreasing. So we could get an easy sell-off in copper prices, and if that does take place, then we could see the market finally tanking. So here's the situation again. Take a closer look at this chart. This is how it looks on the daily. After failing to break above $3 5 times in a row, it is destined to drop. If copper drops, what that means is economic outlook worldwide is continuing to deteriorate. And therefore, the stock prices are not going to be able to keep up at these levels for much longer. Maybe another few months. But after that, guys, get ready because this is super exciting. There's going to be some killer money made on the drop of the markets in the latter part of the 2019. So guys, if you are trying to learn how to make money when stocks drop, make sure you take advantage of our charts divergences course by clicking one of the links below. Get some more information. So again, this stop I just showed you on the daily chart, this is where we are right now. So how close is the drop off? Well, last time we tested it 5 times and we dropped this time 4 times. Looks like on the weekly chart it's 3 times. So maybe the copper is going to sustain this level between 2.8 and 3 for some time longer. Maybe for another month, maybe for another 2 months. But ultimately, we're heading for a drop-off. What makes us say so? Well, check this out. In our charts and divergences, we talk about the head and shoulders pattern. So head and shoulders right here, guys. Boom. Look at this. This is a easy head and shoulders pattern. And I think from here, we're heading for a drop-off. Okay, so those are the top 3 things that are impacting the markets going from here further and clearly making some of these bullish observations. Okay, the market is likely to continue moving higher short term, so position yourself correctly. What could help you nail specifically what to do next is our market move formula. First, you would need to take the 13 Markets Move course to understand how these moves work, how these market move sequences work, so you can be a more efficient day trader and swing trader. Hey guys, thanks for checking out the top 3 things today. And now we're going to disclose some proprietary content to our 13 Market Moves daily subscribers. Unfortunately, we're going to have to pause the video, disclose all this proprietary information to the members. If you're looking and interested in learning the formula, again, just click the links below, get more information, study up so you can make this year your best trading year ever.